morning, everybody, as you're getting settled back from first break of the morning. And for those of you that came up from Mines and Money in Miami or BMO in Hollywood this week, welcome back to Toronto. Sorry to say, we're still in the grip of winter, but spring is just around the corner. Patrick Brindle, I'm the Chief Operating Officer of Piedmont Lithium. I've been with the company since January of 2018. I've had the privilege to watch our business grow from a single asset exploration play in North Carolina to a multi-jurisdiction, multi-asset business with projects in the US, Canada, and Ghana, well positioned for near-term revenue starting in the second half of this year, together with our partners at Sayona, who will be speaking in this same session. So Piedmont is a U.S. domiciled Delaware corporation with our primary listing on NASDAQ. We have a secondary listing of CDIs on the Australian Stock Exchange. We've got about 18 million shares on issue, a market cap of about $1.2 billion. We have an average daily trading volume in the U.S., circa $30 million on a 200-day trailing average, so relatively liquid story. We're very focused on becoming a leading producer of lithium hydroxide for the North American electric vehicle and battery manufacturing market. Our fundamental thesis is that we want to produce lithium hydroxide from spodumene concentrate using the Metso Autotech pressure leach technology. We want those lithium units to come from spodumene concentrate from assets in which we own, operate, or have an equity interest, with a fundamental belief that those businesses which are vertically integrated from pit to finished lithium salts ultimately will maintain an advantageous cost position in the coming decade. As I mentioned, we are in a position to be cash flowing in the second half of this year by virtue of the restart of the North American lithium mine that we acquired with Sayona Mining in August of 2021. We spent the entirety of 2022 and the first few weeks here in 2023 deploying about 110 million Canadian towards restart with capital improvements in the mill and optimization of pit functions. For those of you that are staying, I'm sure Guy Belleau will speak in more detail, but effectively we've undertaken a capital program to increase throughput, to increase grade and recovery, mechanical availability of the operations. From the Piedmont side, I'll skip ahead. We have the right to the greater of 113,000 tons a year of offtake from North American Lithium, or 50% of production. In January of this year, we announced an offtake agreement with Tesla, where we will deliver spodumene concentrate from NAL to Tesla beginning in the fourth quarter of this year and running through the end of 2025. That agreement is a total of 125,000 tons with pricing on a market-based mechanism. Last week we announced that we brought LG Chem onto the share registry of Piedmont Lithium. They're now our largest shareholder. They hold 5.7% of the company, and we entered into an offtake agreement with them for 4 years for a total of 200,000 tons of spodumene concentrate, starting with the first shipment, which we expect in the third quarter of this year, and running for a period of 4 years, 50,000 tons a year, again with a pricing mechanism based on market pricing. So effectively for us, for our allocation of the production from North American Lithium, that places all of our allocation with those we would consider very much tier one customers through the end of 2025, and about 50% of our allocation of production with LG Chem through the end of 2027. LG Chem importantly noted that The agreement was critical to them with their expansion plans for cathode manufacturing in Clarksville, Tennessee, that this represents, IRA-eligible lithium units from their perspective to support the U.S. manufacturing supply chain. We also hold an earn-in arrangement to 50% of production from Atlantic Lithium from the Awuya project in the Cape Coast region of Ghana, and we will maintain that offtake agreement through an earn-in arrangement to acquire 50% of the project interests of Atlantic Lithium in Ghana through staged investments, totaling approximately $87 million plus 50% of the additional cost to bring the Awuya mine into operation, based on a pre-feasibility study that Atlantic completed in September of last year. 50% allocation is about 127,500 tons of spodumene concentrate. Based on the current development timeline, we would see those tons coming to market potentially sometime in the first half of 2025. We're well positioned as a U.S. company with development plans in the United States to maximize value relative to the U.S. government's commitment to support electrification in the battery materials supply chain. We were the recipient of a $141.7 million grant in October of last year to support development of our Tennessee Lithium project in McMinn County, Tennessee, which is a 30,000 ton per annum lithium hydroxide plant featuring Metso Autotech alkaline pressure leach technology. We have ATVM loan applications into the Loan Program Office of the Department of Energy for Tennessee Lithium, as well as our fully integrated Carolina Lithium project. Each of those applications remains under review with DOE. We believe that our U.S. projects at Carolina Lithium and Tennessee Lithium will be eligible for certain tax benefits under the Inflation Reduction Act. Most importantly to us as a finished chemicals producer, we think that the most interesting aspect of the IRA, in addition to the interest from customers to have IRA-eligible battery metals units, is the 45X Advanced Manufacturing Production Credit, which should provide us up to 10% of our annual production costs in the form of a direct pay tax credit. We understand, depending on the final promulgation of rules, that tax credit is on a direct pay basis and potentially can be monetized to third parties. I think a lot of folks perhaps have seen this map grow over the past 18 months, but this is effectively the state of play in the U.S. today with respect to battery material supply chain, with announcements by cell and cathode manufacturers. The resultant demand is something like 725,000 tons per year of finished lithium hydroxide. Today, from ourselves, Livent, and Albemarle, based on announced production plans, we're achieving something like a quarter of that with respect to domestic manufacturing of lithium hydroxide. There are other pre-production assets in the market today that are pursuing lithium carbonate solutions, which will also be an important part of the battery material supply chain in the U.S. in the coming years. And every month that we look at this map, there's another player or another plant that's been announced, and a lot of that, of course, is driven by IRA and continued support by the current administration to really transform the battery manufacturing ecosphere in North America. Just a quick summary. I think I've touched on all of these. We're a 4-asset company today. We're a 25% shareholder in Sayona, Quebec, as well as a 14% shareholder in ASX-listed Sayona Mining. I believe we're the largest shareholder in Sayona Mining today. We have near-term production from North American Lithium starting this spring, and we have exposure to Sayona's Moblan project in their northern hub. Atlantic Lithium, we have an earning right to 50% of production and 50% project ownership interest in the Awuya project, approximately 100 kilometers from the deepwater port of Takoradi. That will support our development plans in Tennessee in the coming years and be the principal source of lithium units from which we'll be able to manufacture domestic lithium hydroxide. Tennessee, we're currently in front-end engineering design of a 30,000-ton lithium hydroxide plant featuring pressure leach technology, which we believe has a superior emissions and sustainability profile vis-a-vis conventional acid roasting caustization, hard rock to hydroxide. That's the the state of the art in China. Today, we eliminate, importantly, we believe, reducing tailings, reducing NOx emissions, reducing certainly sodium sulfate anhydrous as a byproduct to hydroxide manufacturing, which we see regulators in the U.S. being supportive of and giving us a superior emissions profile. Our largest project, and the one from which the company originates, is Carolina Lithium in Gaston County, North Carolina. This is a fully integrated operation, pit to finished hydroxide, 30,000 tons of lithium hydroxide manufacturing, an estimated 240,000 tons per annum of spodumene concentrate, associated mineral byproducts, quartz, feldspar, mica. Our project portfolio over the coming 5 years will have to deploy something like $2 billion in total CapEx, with production restart starting in NAL in the second half of 2023, and then the project timelines flowing on a sequential 12 to 18 month staggered development basis, where we would like to be making first commercial shipments from Ghana by the end of 2024, perhaps by the middle of 2025. In Tennessee, producing first lithium hydroxide crystal, possibly from the end of 2025 into the first half of 2026, and Carolina from the end of 2026 into the first half of 2027, depending on regulatory approvals and project financing activities. So I think we've touched on most of these. Again, NAL, $80 million worth of CapEx designed to improve overall throughput, recovery, grade, and product quality. And that's certainly the element that we are focused on in the near term. Broad range of, as I mentioned, it's going to be about a $2 billion capital program, and we have a lot of different levers that we're looking to pull. Certainly, some of our capital program will be self-funded through revenue that we generate from NAL spodumene concentrate sales. We also have a tremendous value within our ownership equity stakes in Sayona and Atlantic, with the opportunity to monetize to feed into capital programs. We're a grant recipient from the Department of Energy. We have the 2 active loan applications into the DOE, and we always consider a number of different non-dilutive funding opportunities, including selling down a portion of our either Tennessee or Carolina lithium projects to strategic partners, whether OEMs or battery makers, undertaking a number of, say, royalty or streaming discussions, and those dialogues remain ongoing. And I think in the last instance, probably sale of common equity. So a lot of tailwinds for the business at the moment. We're really, really excited about what 2023 will bring. We've been working exceptionally hard to build our project team. We continue to focus on permitting activities on our U.S. projects. We're quite confident that Tennessee Lithium should be fully permitted and allow us to be in a position to make an investment decision around the middle of this year. Carolina Lithium continues to work through its mine permit application that we submitted in August 2021. Hopefully we receive good news in that regard here in calendar year 2023. In Ghana, we've submitted our mining license application at the end of last year to MinCom, waiting to hear news from them, after which we'll submit our ESIA and finally ratification by Parliament. Fortunately, in Quebec, we are fully permitted and hold all of the regulatory approvals that we need to start making SPODCON shipments. This is our leadership team. I'm on the far left, the only one with a t-shirt on. So we've built our team from sort of 4 employees in 2020 to 44 today. My expectation is we'll probably double that by year end as we transition into development construction phase in Tennessee, as well as supporting our joint venture partners here and in Ghana. And just some touch points on elements of value within the business vis-a-vis our equity stakes in Sayona and in Atlantic Lithium, and cash, debt, market cap, etc. All of this is available in our public presentations. I'm not the CEO or the CFO. I focus much more on the engineering outcomes that help support building value in the business. A summary of our mineral reserves and resources on a 100% basis, and generally all of our resources and reserves are JORC compliant. The Sayona resources and reserves are additionally NI 43-101, and in Carolina we follow the new SEC regulation SK 1300, which is a new and interesting animal that we're all learning an awful lot about. And that's us. I see my little yellow light is on, so happy to field questions from the group.